Excellent. Well, welcome everyone. I hope you're all doing well today. My name is Charles Bakai, and I am the Program and Events Coordinator at the Northern Ontario Black Economic Empowerment Program. I welcome you all once again to the Meridian Business Accelerator Loan Program webinar in partnership with associé at NOBEEP. Before I proceed, I acknowledge that I am broadcasting from the traditional lands of the Atikoshing and Anishinaabeg, which is a Whitefish First Nation here in Sudbury. For rules of engagement, if you would like to ask a question, you can either type it in the question in the chat box, and I'll read them out for you, or simply unmute yourself and ask a question. We do ask that you hold your questions until the end of the webinar. Let's see here. Hold on for me. Okay. Solmaz, hold on. Let me just mute this person right here. Sorry, everyone. Solmaz. Sorry, everyone. Let me just deal with this. Hold on. Excellent. Sorry about that, everyone. So, as I was saying, if you'd like to ask a question, you can either type the question in the chat box and I'll read it out for you, or you can simply unmute yourself and ask a question. And we kindly ask that you wait until the end of the presentation to ask your questions. This recording will be available on our YouTube channel, NOBEEP, on YouTube channel NOBEEP, and also on our website at nobeep.ca. Without further ado, I give you our presenters for today, Caleb, who will be starting our presentation, Ifani, and Brian. Caleb, whenever you're ready, just go ahead and get set.
Well, thanks so much, Charles, and good afternoon to everyone. My name is Caleb O'Connor, and I'm the Director of Commercial Service at Meridian Credit Union for Northern Ontario region. Very thankful to the team at NOBEEP for partnering to help us bring awareness to this exciting Accelerator Loan Guarantee Program. It's the first of its kind to be launched in Canada, and it's in collaboration with the Business Development Bank of Canada, or commonly known as the BDC. It's a program specifically fit for equity-deserving entrepreneurs. So I'm here this afternoon with my colleagues Brian Mocha and Ifani Redbu. And in today's presentation, we are looking to help you discover a little bit more about Meridian, talk about what we do at Meridian, the type of members that we serve, the type of communities that we serve. We're going to get a little bit more into talking about the underserved groups, the equity deserving groups, and then jump right into our Accelerator Loan Guarantee Program, discussing the details around the program, who qualifies for the program, and the process to enroll and apply for the program. So to start, we're going to talk a little bit about introducing Meridian Credit Union, who we are, what we do, what we believe in. We're also going to spend some time talking about these underserved groups, as I'd mentioned, and this Accelerator Loan Guarantee Program, which is really designed to help entrepreneurs access capital. So who's Meridian? Well, Meridian is the largest credit union in Ontario. It's the second largest in Canada. And as a credit union, we're 100% owned by our members or our clients. And this uniquely positions us in the financial industry and helps to enable a longer-term strategy to serve our members and to serve the communities that we operate in. Now, similar to charter banks, Meridian serves our members through retail, commercial, and wealth management products, service, and advice. Meridian also owns two subsidiaries. We own Modus Bank, which is a Canadian digital charter bank, as well as Meridian OneCap, which is one of Canada's largest commercial equipment leasing companies. Now at Meridian, we believe in helping our members achieve their best life. And along with our vision to be recognized as an inclusive, transparent, and a people-focused financial partner. And this really does drive everything that we do. Our corporate strategy, which is called Meridian for Good, was developed to bring that purpose and vision to life. Now, our Meridian for Good strategy helps to guide all of our efforts for our members, for our employees, and the communities that we serve. We want to ensure that we're truly serving all members of society while also addressing and helping solve a broad spectrum of social and environmental issues, including affordable housing, climate change, and a transition to a carbon neutral economy. Now, as a community-owned organization, we reinvest in our communities. 4% of Meridian's pre-tax earnings are invested in charitable causes. Now, employees at Meridian also live purposefully, and in 2022, we contributed over 3,500 hours and $340,000 given to charitable donations, serving 538 non-for-profits. I'm now going to ask my colleague Ifyani to jump in.
Thanks, Caleb, and hello, everyone. In support of the program, and Meridian went to do some groundwork. And based on our market research from credible sources like Bain & Company, it was clear that Black-owned companies are more vulnerable to macroeconomic shocks. And with the most recent macroeconomic event in 2020 led by COVID-19, 92% of Black-owned, well, Canadian Black-owned small businesses said they experienced financial challenges compared to 79% of white-owned businesses. So some of the reasons of this 13% disparity includes difficulty accessing funding, which my colleague Brian will get into in a moment, a lack of representation in the business community and in financial services, deficits in training, and insufficient business support. Now, the same data confirmed that 5% of the Black-owned businesses and respondents said that a lack of trust in financial institutions is a major barrier to assessing loans, given the high decline rates, since there's the belief that their race is a huge barrier to accessing funding. Now, they suggest that increased Black representation within financial institutions will help. And I've been a true believer in this because I've experienced it through multiple instances and interactions with other Black-owned businesses who have been trying to seek lending opportunities with financial institutions. Now, in addition to that, a third of Black entrepreneurs who would have difficulty finding even $10,000 to support their business. And most of the interviewed respondents from the research completed by Bain & Company confirmed that not having credit cards and having held negative associations with credit cards debt is one that is akin in the Black-owned in the Black business community in Canada. Now, this has been followed by fewer opportunities for funding, with stronger reliance on alternative sources, which aren't, quite frankly, in abundance. Next slide, please. Now, Meridian's purpose to ensure all entrepreneurs have the support they need to grow. As such, we've come up with the following tools to assist with this purpose. First, we're looking at increasing access to affordable capital through various strategies, which my colleague Brian will be discussing shortly. We're also looking to enhancing business acumen and financial capability, which can be achieved through education and the advice piece, as we like to call it, and helping build connections with mentors, resourceful business partners, potential customer bases, and a lot more. And also increasing knowledge and trust in Meridian to a point of comfort and understanding that we're really here to help. And while we've got the 4-point purpose, it's not entirely just that. And I think, we'll continue rolling out other offshoots of this 4-point agenda. Next slide. Thank you. So the intent of the program is really to meet the needs of the underserved and underrepresented groups of small to medium-sized entrepreneurs within the target market. And having assessed this target market, there are about 400,000 small to medium-sized enterprises within the target market for this program. And of this number, about 268,000 fall into the categories highlighted in the box, which you can see are women-owned businesses, newcomer or children of newcomers, visible minorities, including Black entrepreneurs, the LGBTQ2 plus owned businesses, and Indigenous owned businesses. To achieve our goals, we are very intent on moving up the risk curve to capture these underrepresented groups and expanding our credit risk appetite inclusively through the support of the guarantee program, which we'll get into a bit more shortly. And with that said, I will pass it on to Brian to take us through the program.
Fantastic. Thanks, Iffy. So I want to start by saying that, here at Meridian, we were frankly honored and privileged to be invited into this program. We were one of 4 financial institutions across Canada that was invited to participate in the pilot. Pilot's going to run for about 18 months. And then at the end of the pilot, there will be a full launch to all financial institutions that have interest in participating. Also very proud to say we are the only financial institution of the 4 that were invited into the pilot that has actually launched the program. So we launched in October, and it really speaks to, our agility and just our efficiency as an organization to really put our arms around a program like this and bring it to market. So very excited to be the first to market with this program. What does success look like? First and foremost, it's all about delivering access to affordable capital to undernourished entrepreneurs to help them grow their businesses. Second success factor, we really want to ensure that this program is reaching the underrepresented businesses that Iffy went through on the last slide. And lastly, we want to make sure the program is easily scalable, right? Our footprints, as Caleb mentions, in Ontario, want to make sure we can roll this thing out across all of Ontario and be able to provide the great service to all members and prospects that our existing members have come to know and trust us for. So what is this program? Well, essentially, it's an indirect loan guarantee that's going to provide working capital to those underrepresented small and medium-sized Canadian businesses. Like I mentioned, the program started in October. And I also want to highlight this program is for everybody, regardless of whether you fit in any of those equity deserving or underrepresented boxes. This program is for everybody. However, there is an absolute concerted focus on reaching those underserved businesses. And you have to look no further than some of the data that Iffy went through on one of the past slides. So high-level specifics of the program. First and foremost, this is working capital term loans. They start at a minimum of $25,000 and go up to a maximum of $500,000. The lending vehicle here is a non-revolving term loan, so it's not lines of credits. As far as security is concerned, all these loans will be secured by a first position GSA as well as a personal guarantee. For those that are on the call that may not know what a GSA is, that's short for General Security Agreement. And a General Security Agreement is essentially a charge on all of your non-real estate assets. So that would be your accounts receivables, your inventory, items like that. One of the other knockout criteria is that these loans can't be used to refinance existing debt. It's got to be for incremental debt only. And all of these loans are background secured by a guarantee from the BDC, ranging from 80% to 100%. And I'll get in a little later as to how that works. And lastly, what really helps us operationalize this and provide such speed to our members and future members is that this program relies on our underwriting and our due diligence processes. We aren't running to, BDC for approvals. We do this all on our own. We've developed a really, really slick intake system to run these loans, and we're quite proud of it. So let's talk some of the eligibility criteria for the program. As we mentioned, it's for small and medium-sized enterprises. There's a ceiling on that, so maximum annual revenues, $10 million. If your revenues are coming in excess of that, you don't fall within the target market, and then this program isn't for you. But if your annual revenues are below 10 million, you're going to fit that eligibility criteria. Another thing that is challenging for a number of businesses, and why on that underrepresented slide, we talked about businesses that have been in business in a year plus. This is most of your traditional financial institutions are looking for trends, right? They want financial statements for a couple of years. They want to see that, over at least a 2 to 3 year period, you can show a certain level of revenue, a certain level of profitability. It can be challenging for a business to get financing that's maybe only been in business for 12 months and can't show that stability across a number of years. Part of why this program was developed and why we've launched this program is, while this program is not for startups, it is for emerging and established businesses. So all we're looking for is a minimum of 12 months of financial statements. If you've been in business a year plus, you're going to meet the criteria of this program. There are a variety of sector exclusions. I'm not going to read through them. You can see them on the screen. As you glance through those, you see some usual suspects, right? We're not interested in financing, ammunition and firearms. I will point out, just of note, like 1 or 2 that maybe, don't kind of follow the trend of usual sectoral segments that we wouldn't lend to is the construction, development, or sale of residential properties. This is not a program for construction or property flipping, and it's also not a program for nursing homes. What makes this program really interesting as well is the marketing approach. Obviously, a lot of the marketing, all of our marketing that's gone out has been, laser focused at serving those equity deserving segments that if you went through earlier. And it's a partnered marketing strategy with the BDC. All of the marketing, it's got Meridian's logo, it's got a little supported by BDC in the corner. And really great to kind of have a couple of FIs come together and really come up with some really fresh marketing ideas of how we can market this. So we're proud of the marketing that we've put out to date. Hopefully you've had a chance to see some of it. Program features. So kind of where the rubber hits the road here. I mentioned these are for term loans. Mentioned, and it's worth saying again, that loans start at $25,000. Go up to $500,000. The interest rate, we've got up to prime plus 5. That doesn't mean that the loans are priced at prime plus 5. To give you a little kind of, as I pull back the curtain on this pricing, we have to remit to BDC 2.5% of any loan that we onboard, and that's really in exchange for getting the government guarantee. So to say that differently, if we gave out a loan at prime plus 2.5, that 2.5 over prime would get remitted to BDC, and Meridian would essentially be getting compensated for a loan at prime on our books. So that's what the interest rate's about. The other thing I'll say too is, if you're looking at interest rates, if you've ever gone to a fintech like a Driven or a Merchant Growth, you're looking at interest rates, upwards of 18%, 20%. This is really more patient capital, and anywhere from prime to 2.5 to prime plus 5, far better deal. And also getting out to folks that historically have had a few more challenges accessing capital. Amortizations. up to 6 years. So they're working capital loans, up to 6 years to pay them back. You can pay them back sooner if you like. All of these loans are floating rate loans, so there is no prepayment penalty for paying early. If you took a loan and you took a 6-year amortization and realized you could pay it back in 3 or 4 years, have at it. You're not going to be charged for that. The BDC guarantee, it's on a sliding scale. So for year 1, it starts at 100%, covers the whole amount of the loan. For years 2 and 3, it drops to 90%, and then years 4 to 6, it falls to 80%. This guarantee is really what is allowing us to expand our credit box, move up the risk curve, and really get more affordable capital into the hands of entrepreneurs that maybe haven't been able to find it to date. That's really the catalyst of what's allowing us to do this. There is a one-time 1% registration fee on the authorized loan balance. But one thing that Meridian has done is we've come up with a program, we call it the Switch program. And essentially, anybody that's moving their business and their day-to-day banking and whatnot from another FI to Meridian, new member to Meridian, we will pay up to $2,500 of your switching costs. We know it can sometimes cost some money to move financial institutions, and as part of that up to that $2,500, we're willing to finance that 1% registration fee for you. So another little Meridianized way that we're making this program even more affordable for the end entrepreneur. I mentioned the 2.5% guarantee fee. Again, that's not a fee that you pay as an entrepreneur. That's a cost that we remit to BDC, and it's remitted out of the pricing. So the only additional fee is that 1% registration fee, and we're going to cover that for you as well. Use of proceeds. I mentioned this in the eligibility criteria or in the high-level program specs. This money is intended to be incremental to existing debt. So, i.e., you cannot use these funds to finance existing loans. Pretty straightforward there. And as far as disbursement goes, we can do these in multiple draws, but really simple to do them in one draw. Have all the money up front. And off you go. So there are a couple of segments here. We've broken these loans into 2 segments. The smaller loans from $25,000 to $100,000, and then everything above $100,000 to $500,000 is segment 2. Segment 1 is really, really, really easy to get access to this money. It's easy to get in segment 2, but it's even easier in segment 1, and I'll explain what I mean. There is no DSR test required in segment 1. So what is a DSR test? Well, DSR is an acronym for debt service ratio. If you went to any traditional financial institution and you got a loan out for your business, they're going to want to run a debt service ratio test on your financial statements, which is essentially it's your income divided by your debt obligations, and you need to come out with a ratio of 1.25 times or greater. That's not required in this program for segment 1. You need to show that you've got a borrower risk rating that's not worse than a 5.4 higher risk. It's equivalent to a Moody's or a Standard & Poor default risk of 7%. Just by nature of what we've done in-house, if you meet our matrix criteria, which we'll show you on the subsequent slide, you meet that criteria. And then the amount of the loan is determined by this matrix formula, which again I'm going to show on the next slide. And again, it's what you'll see on that slide is just really how we've expanded our credit box and how we are moving up that risk curve to really get more affordable financing into the hands of entrepreneurs. As far as segment 2 is concerned, again, the BRR is the same as segment 1. However, there is a debt service ratio test that needs to be met, and it needs to show at 1.1 times or greater. So a bit of a reprieve from what would be required from a traditional financial institution or a traditional ask, which again would be 1.25 times. So it is bridging that gap. But what the takeaway here is loans $100,000 or less. Really simple. Not a lot of information that we require. All we're looking for is a personal net worth statement and 1+ years of financial statements. That's it. No business plan, no accounts receivable listing, all that other stuff. This is really, really, really simple. 2 pieces of information, and we've got what we need to make a decision and get you some financing. So I've said it a few times. I think Iffy had mentioned it. This program is about getting more access to affordable capital. And I've talked about moving up the risk curve. I've talked about opening the credit box. What does that mean? This slide is a fantastic visual representation of what I'm talking about. I mean, here's what I'll say. The bottom grid is our existing matrix credit grid, okay? The top grid is this new loan accelerator program. Not even getting into the breadth of the numbers or what any of this means. I mean, the one thing that jumps out to you is there's a lot more red boxes in the bottom grid. That's more of a traditional lending approach. Those red's not generally a good color, right? You fall into a red box. Generally, that's not a space where there's appetite to provide financing. You scroll up to the top matrix grid, you see far less red boxes. There's that expanding that credit box, hitting more entrepreneurs than we would within a traditional lending scope. The other thing that you notice looking at these 2 grids and our traditional lending box below, the numbers cap out at kind of $50,000 under a streamlined credit ask. Numbers are at least doubled and sometimes more than doubled in many of these boxes where you see with the accelerator program, we're willing to go up to $100,000 in many cases with this streamlined approach and no less than $50,000. So right here is, I think, just a really great way that really drives home the point. Yeah, we've moved up the risk curve. You can see it in the dollar size. You can see it in more non-red boxes in the top grid. And, it's really been resonating with entrepreneurs to date. I touched on security a little earlier, so I'm not going to spend a ton of time here. Again, I mentioned the general security agreement. We've got to be a first position on the GSA. I mentioned that as a backstop, we will need a guarantee from all shareholders, personal and corporate, that own a 25% interest or more in the borrowing entity. There's the BDC guarantee, which comes into play, which is what's really allowing us to step out of a traditional comfort zone. And then there's 2 other docs that need signing that are program-specific documents. There's a waiver form and an eligible borrower's declarations and obligations form. What I will say is these forms are attestations that a business owner would sign off. And, to get into the weeds a bit on the borrower declarations and obligations form, essentially that form is saying, hey, my business doesn't operate in any of the excluded sectors. The money that I'm accepting through this program, I'm not going to pay off existing debt. I haven't already, received $500,000 worth of financing this program. Items like that. That's what you're going to see in that attestation for this program. So applying for a loan, really, really easy. I mean, first step is you as the entrepreneur, you reach out to Caleb, reach out to Meridian, right? And you discuss your financing need. What is it you're doing? What is it that you need? Does it fall within a working capital space? once we've identified that, yeah, there is an opportunity in it, and yeah, it fits the eligibility criteria of the program. The next step is we send you over to a BDC site to complete a voluntary self-identification form. So this form is going to ask you questions about, what your ethnic background is, whether you fall into an LGBTQ plus category or not. This is important. We never see the answers of what you would have given to this form, but what BDC is going to do is they're going to provide us with really high level macro data on what was filled out in these boxes. And why that's important to us is if you think back to the success criteria that I mentioned earlier, the second bullet under there was really, is this program meeting those underserved segments of our communities that Iffy pointed out earlier? And it's this form that's going to help us determine if we're meeting that or not. So important that that form gets filled out. And then we process the loan, and I can tell you from experience, from the moment that you as an entrepreneur submit your personal net worth statement and your financial statements to us at Meridian, it's about a 48-hour turnaround window for us to process the application, approve the application, and get fulfillment documents into your hand for electronic signatures. And with that, I think I'm going to pass it back to my colleagues, if you're Caleb.
Yeah. Okay. Before I pass it up to Caleb here, Brian, thanks for that. I was just going to add on here for those on the call. Please feel free reaching out to Caleb at any time. I'm also personally available. You can reach out to me via my Meridian email or via LinkedIn. I'm happy to get on a call with you or have a quick chat with you. I've been involved in a number of pilot programs that were specifically for BIPOC folks. I went through a pilot program for specifically for real estate investment opportunities across Ontario just a couple of months ago through the University of Toronto, the Government of Ontario, Government of Ontario as well as Monumental, which was a great success. We were able to come up with a number of BIPOC folks who were interested in real estate development to help solve the issues we've got on the declining supply of housing. So it's been a success there. And I believe with this program, we're still going to experience a lot of success. I was one of the members of the selection committee and mentors. So I'm happy to have conversations with you outside working hours, if you will. And that's just my own personal volunteer commitment here. Kel, with that, I'm just going to pass it over to you.
Yeah, that's great. Thanks so much, Iffy, and thanks, Brian. So we've learned a little bit about Meridian here. We've learned about this really exciting new accelerator loan program. In addition to that, for NOBEEP's clients, we've tailored an exclusive banking program that is going to really help entrepreneurs with a banking package, not just on the credit side through the loan guarantee program, but also through bank accounts, credit cards, and the special pricing is tailored. So this isn't something that you would be able to access just coming off the street. You have to be a NOBEEP client to access this, and it's part of our package to really promote equity, inclusive growth, and improved access to financing for Black entrepreneurs. So for more information on that, please reach out. We have information to share on that, and that pretty much does it for our presentation today. So we'd now like to open up the floor to some questions, and feel free to ask.
There are a couple of questions, Caleb, in the chat, and I'm just going to read them out for you, okay? The first is, will there be any possibility for this program to be available for startups or something similar?
Yeah, thanks for the question, Sandy. So this particular program is not designed for startups. It is designed for a business that has been in operation for at least 12 months. Obviously, startups, it's a different risk profile with a startup. So yeah, this program, unfortunately, is not for startups.
Excellent. And we have another question from Faisal, and he's asking, does your business need to be incorporated before applying?
So great question, Faisal. So the short answer is no. You could be a sole prop, you could be a partnership, you could have been a sole prop for 9 months and then recently incorporated, and as long as you're incorporated business, you're still running the same business you were running as a sole prop, we count that as part of the 12 months. So any one of those scenarios works. As far as the credit scores go, we rely on personal credit scores for our matrix for this program. So yeah, those aren't personal, those aren't corporate Equifax or TransUnion scores. What you saw on the grid is personal scores. So that works for sole prop or incorporated partnership, etc.
Excellent. Sandy has another question. She's asking, what do you have available for startups?
Yeah, we've got we have a different program. It's called a quick start loan program. I don't have a slide deck handy on me to throw up and run through all that, but yes, we do have an option where we will consider a startup. I will say that one of the things that we would need to see is a business plan as part of the requirements. So it's a little bit more work than what's required for this program, but it kind of makes sense when you think of the risk profile, right? A startup is something fresh. Hopefully it goes off and just becomes an amazing business. My suggestion, Sandy, would be if you'd like to know more, get in touch with me after, and we'll set you up with a small business advisor that can walk you through the requirements and what's needed.
Sandy wants you to share your email address, Brian, in the chat.
Yeah, let me pop it in here.
Excellent.
Great question, Sandy. Thank you.
Excellent. Do we have any more questions for the gentleman? Okay. Well, I've got a couple. Can a single borrower apply multiple times for this program?
Thanks, Charles. Yes. So short answer is yes. You could come in, let's say you needed $70,000 in working capital, and then you realize, 6-12 months later, you need more. You can absolutely come back and apply for more, as long as the aggregate of the funds that you've applied for does not exceed $500,000.
Okay. So the total, I guess, requests cannot exceed 500K. Okay.
That's right.
Okay. And what if I have, I guess, with a single borrower, I have multiple businesses? Right? How does that work?
Yeah, so you could apply for this program under multiple businesses. That would totally work. Again, from a connected exposure perspective. So so let's say, Charles, you were a 25% shareholder or greater of, say, 4 businesses, as long as the aggregate debt under this program of the 4 businesses didn't exceed $500,000, you're good to apply under all those businesses. And again, this debt can be intermingled with other debt, other options we have available too. So if you needed, say, $600,000, we could look at $500,000 within this program and then $100,000 outside of this program.
Understood. Thank you very much, Brian. Right. Last call. Any more questions, people? Oh, there we go. Pfizer has another one. Do you offer any business credit line or credit card through the program, or do you have to apply the usual way?
So thank you for the question, Faisal. So this particular program is only for term loans. However, Within our existing matrix program, that is specifically for lines of credit and for credit cards. And it's the same simple, streamlined process for our existing matrix program as it is for the accelerator program. So you could come in and say, hey, I'm interested in a $5,000 Visa card, a $10,000 line of credit, and a $50,000 accelerator loan. And we could turn that around in the same 48-hour window from the moment that you've given us the documents we need to the moment that we come back to you with fulfillment documents.
Right. Any more questions? Going once? Going twice? I guess that concludes it. Thank you, Brian, Caleb, and Ifani for your presentation. And I just want to thank everyone else for taking the time out of your afternoon to join us here. It's very much appreciated. Gentlemen, do you have, I guess, any last words to the audience before we leave?
Just a warm thank you. Thank you to NOBEEP. Brian, jump in.
Yeah, you took the words out of my mouth. I wanted to thank Charles and I wanted to thank everybody else for taking time out of your day. I know everybody's busy, has a lot of things on the go, so very much appreciated.
Thank you, everyone. Really appreciate the time, and thanks for organizing this great session. And Caleb and Brian, also send my appreciation to you both as well.
Excellent. And just a final statement from me. Again, this recording will be available on our YouTube channel and also on our website in the coming days. So keep an eye out on our social media channels. I will be posting those over there soon. So again, keep an eye out. And with that, have a good rest of the day, everyone. Take care. Be good. And see you around. Take care. Bye-bye.
Everybody.